Eli Lilly cut its forecast after missing expectations in the quarter. For a look at what's going on with the maker of not Ozempic, but its own version of weight loss drugs, let's bring in Lee Brown, global sector lead for healthcare at Third Bridge. Lee, thanks so much for joining us. What's happening at Eli Lilly? I thought the demand, the appetite, I should say, for these drugs was insatiable.
Yeah, what a great way to put it. And thank you so much for having me on. It's been an interesting day. There's a lot to get through. We'll do our best to be succinct. The stock tumbled by nearly 15% today before paring losses back. It closed down roughly 6%. As I mentioned, there's quite a few narratives that need to be addressed. I think the first, clearly Q3 sales of 11.4 million fell short of consensus by roughly 740 million or 6%. Now, the weaker than expected performance, importantly, was driven by type 2 diabetes drug Mounjaro and the obesity or weight loss drug Zepbound. And of course, Lilly's management cited wholesaler inventory destocking for the shortfall relative to expectations. And this really suggests it could be a transient issue if you buy leadership's explanation. This is a view that's also supported by Lilly's approach to its full year 2024 guidance. We can get into that. I think the bigger issue is up until now, the market enjoyed this narrative that demand for these drugs far outstripped supply. That's why the market reacted the way that it did. We saw weaker than expected results that were not due to supply constraints. This is a change in dynamics which could potentially inject greater volatility around future sales performance for these drugs.
The question, I guess, is like, is this just a blip? Is it kind of working through? Because they signaled, well, it's just, working through inventory in the wholesale channel. But does it signal that maybe demand is not as robust as it's been forecast?
I think the demand's there. I think this is, again, nuanced. There's quite a few narratives to get through. Let me try to address a few more of them. We spoke about this quite a bit following Q2 results, and it's important to sort of embrace the idea that this Q3 sales weakness relative to consensus and the market's reaction to that performance really shouldn't have surprised very many people. I'm surprised that we saw what happened today. It was clearly telegraphed by Lilly's Q2 performance and the market's reaction at that time. Recall that Lilly's revenue beat consensus by 1.3 billion, or by more than 13%, with that upside primarily tied to Mounjaro and Zepbound. In addition, Q2 adjusted EPS also beat consensus by how much? 50%. But what did we see with the stock following those results? It rallied just 10% that day. Now, it did trade up following that, but to us, this seemed like an obvious warning regarding the increasingly demanding market expectations that were building into Lilly's stock. I also want to mention that Lilly did hike its 2024 revenue guidance quite significantly. Twice, in fact, going into Q3 results, the revenue moved from 41 billion going into the year in terms of full year 2024 guidance, all the way up to 46 billion. At the midpoint of the target range, that's an increase of 6 billion or over 12%. And this gets back to, is this a bump in the road? Should we be concerned about a $740 million shortfall in Q3 in relation to a scenario where we've already moved up forward expectations by 5 billion? I think the other interesting thing that I wanted to note was the forward guidance. They really didn't move it down much at all. And I'm happy to get into that, but I think that's supportive that this is a transient situation, and it really ties back into, one, the market's perception of valuation relative to the growth profile and what type of holding pattern that client has for its stock holdings. Meaning, is it a long-term holder? How frequently does it like to trade? Because big picture, this market's going to 100 billion, 130 billion by 2030. Is this really a concern in terms of revenue performance? Is it more concern of the valuation tied to Lilly?
Well, let's contrast that with Novo Nordisk, which has been just kind of quietly melting down. And it's a more pure play on this. Eli Lilly has got other things, other irons in the fire. as it were. So does this, are these anxieties maybe exacerbated in Novo, and then would you be similarly more constructive on Novo?
Yeah, well, it's a great question. I think you really got to understand the difference between Novo's drug semaglutide, which is Ozempic and Wegovy, and Lilly's drug tirzepatide, which is Mounjaro and Zepbound. You see, semaglutide is only a GPL-1, and it tends to have more of a negative GI profile, meaning you get more nausea, you get more vomiting, you get more diarrhea. The dual agonist, which is tirzepatide, tends to have a better GI tolerability profile. I think that's what's weighing on Novo stock. It had a great lead. It's losing that lead over time. And more importantly, Eli Lilly has a fantastic portfolio in the space. We've been speaking to specialists about it. We're enormously excited about it. But I want to get back to this whole idea of performance. Lilly stock was up 55% year to date going into Q3. It's still up quite a bit after today's action. I think bringing this back into reality, regardless of how the market reacted, Lilly put up 20% year-over-year top line growth in Q3, and they barely tamped down their 2024 revenue guidance. They took sales down by just $300 million at the midpoint. That's 0.7% on the full year. So I think the message is clear from Lilly's management. They're not really concerned about the Q3 performance of Mounjaro and Zepbound. They expect to pick this back up going into Q4 and into 2025.
Who's kind of the one to watch in terms of who could come in and disrupt this? I know a pill is sort of the elusive dream. Is anybody close?
Well, I'm glad that you asked that. We talked about tirzepatide being a dual agonist. Let's switch over to orforglipron. Now, this is only a GLP, but it's an oral non-peptide. Non-peptide meaning it's small molecule. It potentially, even though it's still a very complex molecule to manufacture, could allow for much greater manufacturing scaling in terms of yield and affordability. Ultimately, this is where we see the market. We see the market as an oral and a small molecule, a non-peptide GLP-1.
All right, interesting stuff.